Hi, this is Kerry Artag with Wicked Stocks, bringing you your daily Apple report for Wednesday, March 13th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the charts. So I'm going to start with this chart here. This is the big picture weekly chart. What I'm going to say about this is the fact that we closed last week below this descending channel top that is 173.64 all week long. We also closed below an intermediate descending channel bottom off that December high that is this week at 174.77. This range, about $1.13 wide, is our resistance for the week, can contain weekly buying pressures as it has thus far, and below which we are expecting a test of long-term support that is on the weekly chart at 166.99. And that remains a 1 to 2 week target. We could test it over the next 1 to 2 days given recent volatility. That is the big picture. Now, I'm going to jump to this chart here on the daily chart. Inside of this 173.64 to 74.77 region is this descending channel bottom on the daily chart at 174.45. I'm just putting it out there. If you want to trade it, fine. The weekly version is 174.77. And if we close today above 174.77, yes, we have a good weekly low, but it really only indicates a 1 to 2 day pop to the upside where we have 177.38. This newly formed descending 1/3 speed line, based in part on the low from last Thursday, is our trend-defining resistance as we move through March. So even if we close back above 174.77, we could test 177.38 within a day or two and fall away then, perhaps through the rest of March, back to that targeted 166.99 level. With respect to the 1/3 speed line, it basically says that if you hold below the 1/3 speed line, bearish momentum remains intact. And so you have to respect the market's ability to back away, fall back to 166.90 within a week or two of testing 177.38. 177.38 is your solid 1 to 2, 2 to 3 week swing trade level. And yes, if we close above 177.38, any day, it could be a daily settlement, that would signal momentum reversal. Bullish continuation then expected within 3 to 5 weeks at the most, probably 2 to 3 weeks to the 188.48 descending 2/3 speed line, where the market there, this is a longer term resistance area, could contain buying through April into May and fall away, and if settled above, would represent a meaningful buy signal as we move into the later second quarter and even perhaps into later year. That is the big picture. Downside, we do have 170.73, a level that we almost tested actually on Tuesday and came off of it nicely. So we are trading inside of this 173.64, which is once again that long-term channel top on the weekly chart. When you close back below these can continue to act as meaningful resistance. Not as significant as we considered the support to be prior to violation, but still sellable resistance. And you can see how, it's been actually containing buying pressures, 173.64, all of this week. That is, yes, all of this week. So once again, if we close above 174.77 today, we should tomorrow, Friday at the latest, test 177.38, 4-star multi-week resistance. If you're long the market for whatever reason, and I don't know why you would be necessarily, we've been in a couple of sell signals the last few weeks, but maybe you are. And if your time horizon is, say, 3 to 5 days or 2 to 3 weeks, I think you should respect 177.38 for its ability to contain buying into April trade. And yes, if settled above, we have a clear buy signal into the upper 180s over the following 2 to 3 weeks. Until then, this is a sell upside pullbacks dynamic market anticipating 166.99, which is a long-term support level. 166.99. Now, I don't know if we'll see it or not. I don't think we'll see it today. If we break 170.73, all these levels are legitimate, but they don't have what I would consider to be pivot point qualities. I really think it comes down to, do we settle today below 170.73? And then, yes, I do think by Friday's close, we test that 166.99 channel bottom, allowing slippage down to 165.32. That is the 1% zone. That is an area, 166.99, that can absorb selling through the second quarter, even into later year. And from here, we can round back up into the low 200s or higher as we move into the third quarter. Now, if we were to close Friday, the week itself, at 165.32 or lower, we enter a meaningful sell signal that should, over the next 3 to 5 months, yield 136.02, where we could actually bottom out through the rest of the year. So 166.99, significant pivot point. Doesn't surprise me that the market has stalled out prior to testing it. That happens a lot as you approach significant long-term support and resistance levels. And if we close above 177.38, I'm no longer expecting the 166.99 formation in the coming weeks. What I am expecting is 188.48 as we move into April trade. I think I've said it all. I'm going to leave it at that for Wednesday's Apple Report. Please click like, share, subscribe. Check out wickedstocks.com. I'll be back tomorrow with Thursday's Apple Report. You have a great day.